the infinite banking concept philosophy is completely different. Yes, there's death benefit, of course, and that's the engine that makes everything else run and gives you the ability to accrue cash value and all of that. The difference is we want this policy for the living benefits. We say, and we've said before, other people say it all the time, everybody wants what whole life insurance provides. They just don't want whole life insurance because you have some thought in your mind about what this is. Well, there's living benefits. And if you don't have the policy designed correctly, those living benefits take a long time to come to reality. With the way we design the policies, we design those with living benefits in mind from day one, so that you have access to that, so you can start taking over the financing of the things of life through your own system here, instead of waiting several years to do that. So the goal here is really to optimize that balance between cash value growth and death benefit. We're not, I'm fairly agnostic when it comes to, what you want to if you want to focus on death benefit, great, let's do that. But let's also build in some flexibility in your premium and the ability to grow some cash value early on, because you may need it. Or if you're somebody who says, I only care about cash value, I'm going to challenge you on that too, because the death benefit's important. Like, what's your human life value? How many dependents do you have? If you walk out, do you want their way of life to stop and all the plans you had for them to stop, or do you want them to continue? Well, if you want them to continue, which you most certainly do if you love your family, you need an appropriate amount of death benefit. So it's really just a proper mix of death benefit and cash value in the design. That's really what it comes down to, is the optimal balancing of the two. So people always say, well, where's the catch, or what's the, what if I want more cash? What happens? Well, there's no free lunches and there's no deals in life insurance. That's just the way it is. There's no deals in life insurance. At a fixed premium, you choose the premium, you can adjust the cash value up, but you're going to adjust the death benefit down, or vice versa. If you want more death benefit, it's going to mean less cash value early on. So they're just different levers you pull. They act in opposite of each other. But it is what it is. If you want more cash value and more death benefit, you just need more premium.
Yeah, absolutely. There's a lot of noise out there, and I don't want to get caught up in it because, people think there's one way to design a policy with one or two specific companies. And of course, that's not true. These people should try owning life insurance contracts from other, really, I would say companies that are, how do I say this? Infinite banking concept friendly, where they've designed their offerings around the concept, actually. And there's a bunch of them, right? And they all have different design features that you can do this with PUA and do this with whatever. And we have our favorite company, I would say, our first stop, because we like the way and the flexibility of what we can do with policy design. So I'll tell you this, there's no reason to compromise the overall design of a life insurance contract just because you want instant liquidity. You can have both a policy that's structured for the long duration with a proper base and PUA ratio, and a lot of liquidity all at the same time in the same policy. So just keep that in mind. We'll talk about later about agent selection and company selection maybe, but it's very important because you don't know what you don't know. We know, and other people may know, but you don't. You're new, right? So just keep that in mind. Knowledge is power. Do your research. There's more than one way to design a policy, and it's not what some people might say.
Because really, most whole life policies are designed for the death benefit. We solve for the living benefits. And if you solve for the living benefits from the outset, you get both. Because guess what? It comes with a death benefit anyway. But as Nelson said, if you solve for the living benefits or for the ability to finance the things of life, you're going to end up with more death benefit than the company will even allow you to have.
That's right.
That's just a natural result of following this concept and over time and expanding it and just building your system out over time.
Yeah, ridiculously simple. Finance the things of life, and you'll end up with a crap load of life insurance if you do it through the infinite banking concept way. Very simple.
That's it.
Also, go check out in the show notes the link to our website, thewealthwarehousepodcast.com. We've got a bunch of great resources on there. You can watch Dave's little video that's very handy. And do not schedule a call with us unless you've read Nelson's book, which if you're watching us on YouTube, it's right there. So read Becoming Your Own Banker, maybe some other books in IBC, schedule a call with us. We'll be more than happy to talk with you.
Absolutely. And until next time, control your capital.
Or somebody else will.